Hello everyone. Today we are going to work together and look at the December 31st session, the last session of the year. And so we are going to take a look at the market opening. On your left, the Nasdaq, and on your right, yes. Let's see what the market has in store for us. We can already see that there's an order at 69.49. There are quite a few lots here. So let's see what's going on and what's happening. What is the market doing? The most important thing for us is to get a sense of where it stands. So what we need to know and understand here is whether this is a bullish market or a bearish market. For that, one of the techniques we have is the following. So we're going to flag our two markets and see which one is stronger and which one is weaker. There you go. It looks like it's going to reach it. We see quite a few wicks. I would say let's try to take a small contract. Well, that's not a very good sign already. We can see that the big bid has been removed. 66 liquid here. We can still see that it's struggling. It's having a lot of trouble going up. We're also in an end of year market, so we shouldn't expect a lot of volatility either. Here, on the other hand, we're seeing a lot of pressure coming in and the market hasn't gone up at all. So that's not necessarily a good sign. What we're going to do is close our position, because right now we were in a long thinking the market would go higher, but for now it's not doing that at all. Let's take a look at what it's doing here. Let's also take a look at both markets. We'll pause so we can discuss it a bit more easily. Here you see when we opened, we marked these two levels, 25,681, and on the IS, 694,625, which are our two levels. When we centered, those were the two levels that were centered. So what's quite interesting to see here is to understand a bit which market is stronger and which one is a bit weaker. For now, we're looking at two markets that are synchronized, which are rather at the bottom. And here you see, we see again here 69.49, our large order coming back here. Let's hit play. Let's see a bit what the market is going to do. Here, what we want to see to reach that level is a push. Okay, it's really pushing now. We will definitely try again. Here, you can clearly see the Nasdaq index is a bit stronger and performing better than the S&P 500 index. But not by a whole lot more. And here we can see that again, the long order we had is still at a loss. That's not necessarily a very good sign because that's the fifth time, twice in a row. We thought the market was long, and that's twice now that the market hasn't. In our direction, we're already down $225. So we're going to stop it here. So what is the market telling us? Right now, the market is telling us, I don't really want to go up right away, higher. So what we're going to do is take a reverse position right away, go in our direction, and try to place an order a bit higher. Because actually, what we realize is that this level here is more of a resistance level than a support level. We're also looking at the delta, and we can see that this is the level where the most aggressive selling took place. And here, the longs who got trapped were the most aggressive ones. Let's take a look at our two markets. We can see that both markets are currently synchronized. Both are going down. With just one contract, you can see that we're at a gain of 93 for a loss of 225. But for now, we're doing pretty well. We can see that the market is really struggling to go back up. So what we're going to try to do here, as always, is to identify micro support levels that we can then use, add to that so we can trade a bit of range afterwards. But once again, we're at the end of the year, so it's much more difficult with a lot less volatility. We'll see in other examples like the ones we had in December. Usually, when at levels like this, we have a market that moves very quickly up, then very quickly down, goes back up and drops again. Here we have a market that's really struggling, not really finding buyers and not really finding sellers either. And right now, it's just going down. Afterwards, it's actually positive for us, since right now we're in a market that's moving in the same direction. We find 32 lots at 25,650. So for now, apparently there's not much to do. Plus, nothing is happening, as you can see. We're still very far away. from the levels that were marked at the NQ level, at the IS level. Obviously, it's a much denser market. It takes more time. But here, what we see is a lot of difficulty climbing back up. We had this level, which is going to succeed. You can clearly see a little bit of the incredible speed at which it's diligently trying to climb back up, ever so slowly but surely. But with these little abrupt moves, you can see it can't manage to climb back up. Very, very big difficulty. It's a level we also noticed earlier that we saw a bit on the tape. There was movement at that level. And now what we're going to see is what the market will do. We're in a market that's much stronger in terms of NQ. IS is very, very low compared to NQ. Now, what we're going to try to see in order to understand and ask ourselves if the market is really going to go higher is whether we can get a breakout here that's interesting, that pushes us further up. For now, we can see that this level is more of a resistance level. There you go, it's coming. It immediately turns back, and here we see the tape is very red and keeps going down. For me, on a market that's going to keep dropping, so since both the NQ and the US are moving in the same direction, for me, these are both very interesting markets to short, because right now, I don't see either one being stronger than the other at any point. NQ might be a little bit stronger, but only just barely. And there you go, that's it, it started. As you can see, it was still very interesting. The market tried to climb back up a little bit. We saw it very clearly on the NQ where it reached our level of resistance, and then it moved very, very quickly. And now things are moving really fast. So now what we need to start doing is looking at when we should exit the position. So when we start to see a market that's slowing down, a market that bounces back very quickly, that's when we'll exit our position. Otherwise, for now, there's really no need to close or stop our position. Since the market keeps dropping, it's falling very, very sharply, both on the IS and on the NQ, on both. For now, we have a market that's going down. It's having a hard time bouncing back up. But we'll see here. Specifically, is this the time to stop? No. The market is still going. It's a very trending market, same on both, whether it's IS or ONQ. And already, here we are, we're 7 minutes into trading, and we're almost at 1,000 in profit, whereas as you saw earlier, we were under 100 at the very start of the session. There you go, with one exit. We exited on the NQ with 800 in gains on the NQ. For now, we're still holding on the IS, or maybe, well, that's to reduce our risk a bit. We're seeing a lot of activity in aerospace, a lot of volume, and we can see the aggressiveness. The tape is red, a lot of red. This shows us that the market is very bearish, and it's really almost impossible to buy back into this market. So here, what we saw here was still a bit of a level that appeals to both buyers and sellers. It's a level we're going to mark. We're also seeing a lot of green. This is the level that's very interesting to mark, because what we want to see here is how the market will react. At this level, which for now seems to be a support level, we're seeing a lot of green. Normally, when you see green, it means a very quick rise. So now what we're going to do is see if the market manages to climb back up with all these buyers that have come in. As we've seen with the Taipan, there have been quite a lot of aggressive buyers. We can also see it in the delta. Across 4 levels, we end up with a lot of buyers compared to the rest, which is still mostly selling. But here we can see that even with all these lot purchases with that tape that was very green, we still can't manage to climb back up, which in my opinion is not a good sign, because it means the market is taking a pause, sure, but it still can't manage to recover. So here, what we're also going to try to watch for is whether we can get some small upward jolts that would give us signs of a reversal. But right now, that's not what we're seeing at all. Here, the market is very red, a lot of lots, but we keep going down. So here we can see that the ones taking control for now are really the sellers. Even though we've had a tape that's been very red with a bit of green as well, we can see that the market hasn't necessarily gone back up, or rather hasn't dropped a huge amount either. So here, what I'm going to do in response to this is usually a bit of a sign of a market that could reverse, a market that can't go down, a market that can't go up. So now what we're going to try to do is watch closely. Will the market give us other signals? Will the market break and thus break below the lows since the New York Open? Or are we going to keep going? We can also take a look at the NQ, which can also give us some clues. So we can see that it's still pretty aggressive. It's going down. And a lot of orders, there are a lot of orders being traded. There you go, we've just broken through, and basically what this is telling us is yet another sign that we're continuing to go down. Right now the bulls are no longer in the market at all, and they're unable to defend, and we're going down. And I think we're still going to keep going down, even if it's taking quite a while. Once again, we have to remember that we're still in a market that's on December 31st. When it comes to scalping, it's almost, you could even say it's boring, because right now there are very few levels you can normally play. With micro scalping, you can very easily be in longs, shorts. Here you realize that being in a long is almost suicidal. It's very, very complicated. For now, the market really doesn't want to. On the other hand, what's still interesting for us to look at here is what made this level significant, because as we saw earlier, it's a level that was heavily traded. If we see that suddenly it breaks through this micro resistance and that this resistance becomes support, then once again we'll buy at this level there. Perhaps we were a little too aggressive with our short position, even though it was initiated at the very absolute lowest points. However, the overall market sentiment still clearly showed that buyers were not truly able to control the situation effectively. That is precisely why we maintained our short position. You really have to be very patient with this market. Things move much faster, but it's still struggling a lot. It's barely moving. Hardly at all. We're almost stuck. Well, that also means the market is taking a breather. It's finding its footing to prepare for the next move. I'm not very comfortable with this level, so what I'm going to do is close out my position and try to get back in a little higher up. If that's the case, even if it drops and takes off without me, it's not a big deal. I think when it comes to safety, it's always more important to close out a position you don't feel comfortable with, a position where you think you're not necessarily at the right level, so you can get back in later. Yes, of course, maybe I was wrong, the market keeps going down, but it's a safer approach since the market was really struggling to drop anyway. We're not going to tempt fate. For now, it's better to exit this position. It's clear that it's still impossible to take even one. For now, at this moment, the current market doesn't want to go up. It consistently continues to go down, showing no signs of upward movement. The market keeps going. Being one that keeps showing a lot of color, that's actually a good sign for us. It really means to keep following the trend. The market has indeed slowed down a little here, but for the present moment, it is consistently going down after experiencing a rather significant and noticeable drop. We are certainly not seeing a steep and very rapid decline in its overall value, but it is undeniably true that, for the time being, there is absolutely no clear sign whatsoever that the market genuinely wants to go higher or recover its previous upward momentum. We're already reaching the end of these 15 minutes. So we had a short session and we managed to make $1,025 in this session. But it's true that in terms of scalping, it was maybe a little disappointing since we could barely take any longs or shorts. We tried to go long on the market because that's how the market came to us at the open. There was a lot of information. We had that big order sitting on the IS at the highs and we wanted to go after it. We saw that we tried to go long twice in a row, but the market didn't want to. That's a sign that the market is very weak because in fact we still had indicators suggesting we could be in a bullish market. The tape was pretty green. We had those 200 lots higher up on the SP 500 and we saw that twice we tried to get in, we did get in, but each time the market could not hold up. So actually that was a huge clue. That's why we then went short on the ES and the NQ with two shorts, because it was a sign that the market was very weak. And what we also noticed right from the start was that the NQ and the ES were moving in sync. So when one market was going down, the other was too. We didn't necessarily have one market that was stronger than the other. NQ a little bit more, but compared to the open, we saw that the open quickly became resistance, and that's what happened. We just kept going down.